Hello, good afternoon. Welcome to day 36 of this 60-day trading challenge. And today again was a great day in terms of the experience. Obviously, we also thankfully, gracefully, we were able to also close the day in a decent profits. But again, P&L is not the criteria, but more is the experience. And experience from a trading experience, it was a great experience because there was high volatility. The morning started in a kind of bearish direction, and in between it was fluctuating, and all of a sudden, post noon, ferociously it went up. So handling such days from an intraday perspective, if you are a positional trader or if you are an investor, this doesn't matter at all. But if it is as an intraday trading perspective, such days becomes very challenging, and that is where the rule-based trading plays a key role. So it will be interesting to go through the learning for the day. So I'll just walk you through the trading analysis for the day. In the process, a lot of learning can be seen. So the day started, if you look at the Nifty chart, the very first candle, first 5 minutes candle, it looked like it's going to open in the green territory, but it lost its sheen within a few minutes after the market opened. It went negative, and then as you see in the next 5 minutes candles of subsequent multiple 5 minutes candles started showing a red. It was forming a red candles. So at 9:30, our strategy based on the available trend, it signaled a bearish trend for the day. And we entered the trade, as you see here, at 9:30. We sold the 24,900 call of next week because today is the weekly expiry day. As I also mentioned earlier as well, on a weekly expiry day, we use the next week's instrument, not the current week, because the premium will be very less and volatility on that the premium will be, or the instrument will be very high. So we prefer to do the next week. So accordingly, we took the next week instrument and we sold it at 109.45, and we had set an initial stop loss of 164.20. And the trade was in decent profits, I would say, till around 10:40 or so. That means more than an hour or so. The trade was in a decent profits. At 10:40 candle, at 10:35 candle, it came to the cost. But as you see here, 10:40 candle, the premium shooted up, and that is because here also on the right side, as you see the Nifty chart, we mark the ORB, the opening range breakout, and then the opening range breakout breached on against our trade at around 10:35 or so. So we had to exit there, and then it also, as usual, it triggered the stop on reverse trade, and accordingly we exited the short position before the stop loss hit. We were able to exit because of the ORB criteria. We were able to exit at 118.60, and also we took a long entry over there. The long entry is because again the VIX was above 15, and then it was favorable for a option buying scenario, and this is where the stop and reverse trade took place. And as you see, the VIX was also subsequently raised, and that indication we could see from the movement of the uh, prices of the premium, and that is where we went in for a long. And as you see, we exited at 10:40, and then within a minute, just single minute, we were able to exit, while our objective was just to make a small profit, that is to cover the first trade loss and the costs incurred. It shooted up within a 1 minute. We were, just to exit also, it takes at least a minute, right? Like within that 1 minute, it went up 161, and the premium reached more than 161, and we exited at 161.30, and that is how we were able to make a decent profit for the day. Otherwise, our objective was just to cover the cost of the first trade and also to recover the loss only, because the loss was not very huge. It was hardly about 600, 700 rupees. And then our objective was to make around 700 to 800 rupees in the second trade. But it uh, fetched us more than 3,000 rupees. So just because the premiums shooted up. And that also shows an important element that if we don't use the stop loss, or if if we have just a mental stop loss, not putting in the system, what can be the impact? Somebody would have lost huge money if they had not had the stop loss in the system. So that's why it is important and critical that we always put the stop loss in the system so that we will get a exit at the desired levels. And after that, you see that again it came down and it came almost closer to our initial level. But it doesn't matter. These candles doesn't matter to us because we exited over here the second trade as well. So what is the takeaway from here is, generally, if you see most of the days earlier, whenever we exited a stop loss, that was the probably the peak level, and it would have again come back or below even our sold price, and it would have given a feeling that had we remained in the trade, it would have probably we need not have to take, it was not, there was no need to take a stop loss kind of a thing. But today, if had we remained in the trade, look at the impact. It closed more than 280 rupees. So for a premium sold at 109 rupees, and if it had closed at 280 rupees, you would see the kind of loss we would have incurred. So that's why whether the stop loss, the price later on comes back to us or not is not immaterial to us. We should be ensuring that our stop loss and our rules are always respected and maintained, and that is how the process will result in positive results. So again, just the importance of the ORB and stop and reverse trade and the stop loss, I just wanted to highlight over here. And as usual, going through the our trading journal, we sold the initially 24,900 call as I explained, and then we sold it at 109 rupee 45 paise, and then we covered it at 118.60. We incurred a trading cost of 62 rupee 40 paise. So which means overall we incurred a loss of 748, 749 rupees. And the second trade was a long trade. Instead of a short trade, this was a long trade. And the same instrument, we entered at this 118.6, the long entry, and then we exited, as you see, 161.30, and then we incurred a trading cost of 68 rupee 10 paise, which means we made a profit of 6,134 rupees net profit over here in this trade. So this decent profit helped us to again reach our peak P&L level of 15.228 percentage, which is now again a new peak for us. And as you see the equity curve, we took a dip in the first trade, and then the second trade was a decent profit, and hence again it regained and created a new peak in terms of the P&L from the journey we have been making for the last 36 days. So that's all for the day. Thanks for your continued support, and see you tomorrow for the 37th day of this trading challenge. Hope it is helping to get insights of the lot of rule insights about the intraday trading. So thank you again. Bye bye, and have a great evening. See you tomorrow. Bye bye. Take care.